Welcome to Quantum Finance. My name is Parker. I'm the head trader here, but I am not a financial advisor and this is not financial advice. So in today's video, we'll take a look at the economic data, we'll look at some news, we'll do a market recap, and then we'll look at the trading opportunities from today. So here on the economic data front, we did have JOLTS job openings here come in way worse than expected at 9.93 mil, forecasted 10.4 mil. Here's the economic calendar. So tomorrow, Wednesday, April 5th, we do get ADP non-farm employment change, ISM non-manufacturing PMI, and crude oil inventories. So now we'll look at some news here. This is the chart from the job openings, with this being the second largest decline in in history, like on record here. As you can see, massive drop here in job openings, only behind the pandemic crash that we had in 2020. And this is the Atlanta Fed GDP estimate here. As you can see, just a massive drop in their forecast for GDP, being cut, basically in half over the past couple of weeks. And we have auto loan and credit card interest just hitting a new record high here, with credit cards being at 24.5%, used cars at 14%, and new cars at 9%. And this is a chart here from JP Morgan Equity Macro Research. As you can see here, this is just massive decline in excess savings. They are forecasting that excess savings in the U.S. will likely be completely depleted by June of this year. And we do have gold back over $2,000. We have the U.S. sending another $2.6 billion in weapons to Ukraine. And we have Russia warning of an escalation following Finland joining NATO. So yeah, now we'll look at the market. Starting here in the debt market, we have the 10-year yield. As you can see, another red day here, getting continuation to the downside. Looking to come in for a retest of these lows from March here, just making its way down to this lower daily extreme here. Getting pretty close to this lower extreme on the weekly as well. Looking at the dollar, we do have another red day here in the dollar, getting continuation to the downside, breaking through last week's lows. Just pretty much touching this lower extreme down here. So it's going to be really interesting to see what happens in the dollar here. So now we'll look at stocks. Stock market, we do have a red day here. If you remember in yesterday's video, I did say I expected some resistance coming up here because we were super extended up here on the daily chart, to the upper extreme here. And, we had gone up for basically 3-4 weeks in a row. So now we'll turn to crypto. We have Bitcoin getting a green day, still consolidating up here at the upper end of this daily range. Getting, two bounces so far here off this midline. These bands are starting to get pretty squeezed here, so I'll definitely be looking for a move soon here in Bitcoin, coming up through the rest of the week. XRP getting a green day, back above 50 cent here. Kind of holding this previous wick that we got last week, or 2 weeks ago, should I say. So we do have this midline creeping up here, kind of holding support. So it would be nice to see if we can get another bounce continuation to the upside. If you look here at the weekly chart, we are wicking perfectly off that upper extreme. Yeah, so definitely be interesting to see what happens to XRP here. It would be nice just to get a massive, spike up here in XRP. $10,000 would be cool. Nah, I'm just kidding, but not really. But yeah, definitely keep an eye on XRP because, we are getting close to this midline and pulling into support here. So now we'll look at gold. As you can see, breaking out that bull pennant that we've been talking about the past couple of days, after wicking off that midline, really extending to the upside here, getting really close to all-time highs up here around this 2070 level. So, yeah, oil could be, days away. Gold could be a couple days away here from making new all-time highs. And now we'll look at oil. Green day here in oil, big wick to the downside here, but still sitting up here in this kind of inside day from where we got that gap up yesterday. Still kind of holding this upper support here around this $80 level. So now we'll look at silver. Silver, really strong day. Just monster day in silver, breaking through all this structured resistance that we had, coming into January, making a new high on the year here, getting a nice continuation to the upside here on the monthly chart. I did say last month that if we did get a close above this midline on the monthly chart, it would be super bullish for silver here. And this upper extreme is sitting up here about $26.14. So I would be looking for that to be the target. So now we'll look at the trading opportunities from today, starting with our volume analysis here on the SPY. Nothing crazy today, volume-wise, just, pretty consistent, but we did get majority selling today. We are starting to get that stock RSI to, curl down here a little bit, turning red on the week here in the SPY. So now we'll look at the 5-minute chart here. So this was our open up here. As you can see, we just got a lot of selling pressure, just basically straight down till about, 12:15. Then we kind of got a bounce, for like an hour before getting continuation to the downside. But we did get a nice little pop here into the close. So now we'll look at the relativity. As you can see here, this was the SPY with that massive sell-off. And then this was the Qs. As you can see, much stronger than the SPY with a lot choppier action to the downside instead of just consistently selling like we got in the S&P 500. But as you can see here, from this 12 to 130 mark on the SPY and the Qs, we did get rising wedges here, which is a bearish reversal pattern. And with this with this much weakness, I was looking for puts because I was already coming into the day bearish, because we were pretty overextended to the upside here. We can look at the other time frames here. I do want to show you something here on the 2-hour. So we did have this kind of, uptrend here that we got pretty close to touching yesterday. So we do have this kind of channel forming here in the SPY. And I did think we were just pretty overextended to the upside here, and we were going to start making our way down, at least to the middle of this channel here, down towards this 50-day moving average. And if you do look at the Qs, let me pull the Qs up real quick. Looking at the NASDAQ here on the 2-hour as well, you can see we do have a rising wedge, which is a bearish reversal pattern as well. So I did think we were pretty overextended to the upside here on the NASDAQ and the Qs. We both had, pretty bearish patterns on the longer time frame, with these uptrends, running into the upper top of this channel here that we were in on both the SPY and the Qs. So I was looking, to get short today. So yeah, we'll go back to the 5-minute. I did like these for put options, getting after we broke out of this bearish reversal pattern. So you were looking at an entry around here when we started getting a momentum shift to the downside. As you can see here, we have these 408 put contracts pulled up. So let's say you're getting in here around, we'll call it like a 102. And on that extension to the lows, you're looking at about a 46% gain. And these were tomorrow's expiration date. But I want to show you the relativity here. Because the Qs did have a better squeeze. As you can see, the SPY only got a slight, pretty quick 5-minute squeeze. The Qs did have a better squeeze here. But I went with the SPY just because it was purely a lot weaker. And I thought we would close, or at least get another attempt down here back through yesterday's lows. So, I mean, either one would have worked out for you. I like this falling wedge better too than this kind of, ascending channel here. But you could have gone with either one, They both would have worked out. There was some nice synergy today. But let's look at the 30-minute here. As you can see, the kind of trade we were looking at. So the 30-minute, as you can see, we got that big push down, bounce off this lower extreme here. And then we got a trade line crossing to the downside, which is a bearish EMA cross as resistance here. And so that is when we got that rising wedge. And then we broke out of that, with this bearish cross. That's why we like these for put options, because we did have really bearish EMAs. We had downward momentum. And if you look up here on the 1-hour too, we did have that trade line on the 1-hour as a ceiling here that it was running into as resistance. We did have, though, this 2-hour trade line here coming in as support. But we were breaking down through the midline and everything on the stock RSI. So I did ultimately think we would get back down through there. So yeah, really nice trade here for put options on this trade line 20 EMA cross to the downside under this 1-hour trade line here. with our rising wedge, which is a bearish reversal pattern with momentum shift to the downside and a squeeze. So yeah, really nice here, but I wasn't really looking for new lows on this, mainly because we had this 30-minute extreme, just sitting right down here. So I didn't think that it was going to make new lows on the day. This was just a trade for a retest, of the lows down here, which is what we got, I mean, I was pretty much out like right in here because I realized we weren't getting a tight squeeze on the SPY. So I was out like, I got out on this candle right here. That's where I was out at because we were through that lower extreme here with the squeeze already fired to the downside. So I wasn't looking for like a monster continuation to the downside because we did have those lower extremes there, as I just showed you. And we did have like, some support here with the 2-hour and the 1-hour 20 EMA. So yeah, this was just, a trade, shorting into resistance and covering at support. So a really nice trade here for put options on the SPY to take advantage of the weakness we got, this pullback from just being super overextended to the upside. And there was another trade I wanted to go over today. This one's kind of different than the trades we usually go over because this is a small cap company. This company is CDLX or Cardlytics. This one happened earlier in the day. This happened at around 12:30. That SPY trade didn't happen until 2. And there's really no other moves going on at all. So I was watching the small caps because there was a couple small caps, making some moves. So I was watching this one. I did like this one because as you can see, we got a nice push up here through the 100-day and the 50-day, which pulled in right there into VWAP as support with our squeeze to the upside. We can go to the daily chart. As you can see, just getting a huge squeeze to the upside here with just monster volume. No other days even comparable on the volume. Yeah, but we like this one for just, a squeeze up to the highs, as you can see. Yeah, this is a really nice trade, but what stood out to me the most when it comes to, like, if you're going to trade small caps, you really got to look at the statistics behind the company. It's different when you're trading, like, options on these big companies because you don't have to worry about them. But when you're trading small caps, you have to do a lot more research in the company. So I suggest going to Yahoo Finance and searching it up and looking at the statistics page and looking at like the float, how many shares are available, and the short percent. So here on the short percent, we had a 15.53% of the shares short, and that's like a really high amount. So I did think we could get some, continuation to the upside here, just kind of a short squeeze. This was news that this company had news that they were like raising their guidance or something like that. Yeah, they raises their Q1 guidance. So it had a bullish news catalyst. It had a high short float. So this was a nice move for a short squeeze, up through these significant moving averages and, pulling back into VWAP here, as you can see with that trade line VWAP crossing the 15-minute. So yeah, a lot of really nice things lined up here on this trade. I don't really think we've gone over many small cap trades on this channel so far, but when the market's super slow, low volume, and just kind of bearish, there's no other mega caps or blue chips kind of moving. And if you have small caps on here, they're worth watching. There can be some really nice short squeezes in the small caps. So yeah, really nice trade here on CDLX and the SPY. But yeah, we'll look here back at the daily chart. So, we are pretty overextended here. So we are pulling into, last month's highs. That's currently like where we're bouncing off of. That's where we got that wick off of. But, I probably would expect maybe some more downside here, or at least some consolidation to let this midline kind of catch up. So, I mean, we didn't get the highest volume day today, but I'm probably going to be looking for puts again tomorrow. Maybe, back to these highs down into here, because we'll have that midline coming up and we have these highs right here. So I might be looking for more puts again tomorrow. But yeah, I think that should do it for the video. I appreciate y'all watching, and I will talk to y'all later.